welcome back to Data Driven Finance, brought to you by Envestnet Yodlee. I'm Mike Stiles, and my guest today is Michael Whitt, president and co-founder of ApexEdge. We're talking about subscription-based products and services. Michael, welcome. And before we dive into the world of subscriptions, why don't you just tell us a little bit about what got you into finance to begin with, and specifically how ApexEdge kind of represents the fintech interests that you have now?
Sure. Thanks very much for having me today, Mike. Delighted to be here. The co-founders and I at ApexEdge started the business years ago now in what was a nascent industry. We always said we weren't fintech guys, and now I guess we've been in it so many years. We are definitely fintech guys. We're out of the services space, and by that I mean the bills that we're currently negotiating to save customers hundreds of dollars on their bills. We came out of telecom services, phone, internet, TV, alarm, and so on. And our thesis was in that space, there's a disparity between consumers and providers. The providers, of course, want to charge as much as they possibly can, and consumers want to pay as little. And so most of these companies, of course, are, Fortune 500 for sure. Many of them are in the top 50, and they are in an airline pricing model. And so consumers buy, phone, internet, TV, alarm when they're moving or when they are establishing a new service for their partners or kids. And other than that, we're really trained as consumers to avoid talking to providers. And so we founded this business based on previous experience where customers would call us and say, hey, can you do anything about this bill? We weren't in the business at that time, but that kind of prompted us to figure out how to become a concierge for consumers. And we adopted that for the fintech space. We don't want to be a direct to consumer team. We really want to bring value, sort of account management, concierge type services to trusted providers. And those trusted providers are banks, credit unions, PFMs that already have relationships with clients, and those clients are thinking about their money. And so it's a perfect place to do calls to action and so on and say, hey, while you're thinking about your services bill, your $200 or $300 internet and TV bill and your $200 or $300 mobile phone bill, maybe we can help save you some money. And at the same time, you have all these subscriptions that you may or may not be using. Let's take care of those as well. And so that's why we partnered in the fintech space with more traditional players.
Yeah, well, it seems like you can't own anything anymore, right? I mean, I know newspapers, that's always been a subscription model, magazines, that type of thing. But, I used to be able to own Microsoft Office and use it all I wanted to. And now I'm paying for it every month as a subscription service. Now, beyond subscription services, people are starting to talk about surge pricing, like you said, more like airline pricing, where you never know from one moment to another what the price is going to be. It just depends on a lot of factors that we don't see. Why is that evolution happening? That model of owning something and being able to use it for as long as I can, that works for me, but apparently it's not a desirable business model for businesses anymore.
Yeah, it's a fascinating cyclical model, and I think we'll get back to bundled services. Currently, we're in a great state of unbundling, and what I mean by that is you used to have one bill for all your channels, right? And now we all have some combination of Netflix and HBO and Hulu and Max, name one. The average household from about 4 years ago, 3, 4, 5 years ago, went from 2 subscriptions. It was always Amazon and Netflix, right? To the average household having, depending on who you read now, somewhere between 12 and 16 subscriptions. It's an enormous unbundling. And with that comes great choice. Theoretically comes great savings, because now you don't have a $200 bill. You just have all these little $9 or $10 or $12 bills. The problem is that catch. All these little bills, they add up. It's death by 1,000 cuts. And so while the initial unbundling was good, it's probably still good in terms of choice. As consumers, we're really overwhelmed by how we buy services. And so every household, I challenge everybody listening, take a look at your bills and you'll see subscriptions you don't even know that you have. It was convenient to sign up for HBO when Game of Thrones was on. great channel, great show. Sure. But then it ended. And so, but you're still paying for it. And so this business is really fairly timely, we believe. And we think especially subscriptions cancellations is going to be table stakes for a lot of banks and credit unions, not just for the consumer aspect of it, not just to bring consumers into the native ecosystem, not just to delight them by helping them, but because banks and credit unions and so are going to start seeing and are seeing enormous friendly fraud. All of these providers make it really hard to cancel. The service we're providing is not brain surgery. You're just calling and canceling a subscription. But it turns out there are some tricks. The providers want us to sign up. You sign up in 2 minutes or less. It's really easy. But then there it go almost in perpetuity. Try to find a way to cancel your subscription. Everybody has horror stories. They change that process monthly, many of them. And so our product is really about solving that conundrum. We're really a concierge for customers. We know how to contact providers. We know how to cancel the unwanted subscriptions and sometimes even get refunds. And so it really is, again, it's back to leveling the playing field between customers and providers, customers wanting these services, not forever, but helping them to manage them.
I go through life mostly trying to be naive, but it just sounds like these subscription plans and the terms, they are complicated on purpose. And that seems like a very hostile way to approach your customer base. Is it easier also for them to incrementally ratchet up their prices without the subscriber noticing? Is that what they're banking on? Is most people are just not paying attention. And that's why what you're doing kind of offers, like you said, a customer experience from your bank that actually is needed and wanted by you, the customer. It's like, wow, I appreciate that my bank, is canceling this service for me, or notice that, it's gone up 50% in the last year.
Yeah, it's this ongoing, I always call it, like you said earlier, airline pricing. It's the nature of the business. We don't position ourselves as David and Goliath by any stretch of the imagination. This is really just game theory, right? All of these major providers want to charge consumers as much as they possibly can. Economics 101, and consumers want to pay as little. But the reality is, yes, there's that ongoing, incremental, never ending increase in prices. And we all see it. We all see it as consumers. You see it if you look on your phone, on your internet. We all have these bills on auto pay. Well, that's what the providers understand. And so they creep up $1, $2, $5, $10. But within a couple of years, you're paying an enormous amount of money. So whether it's a subscription that $10 or $12 a month that incrementally increases, look at Netflix, look at any of the channels especially, or it's one of your services bills, your phone or your internet or your TV, really, we as consumers don't manage those things very well. And that's why, back to your earlier question, unbundling works so well for the providers, while at the same time it's working well for us. We're too busy collectively. We look at our bank accounts, you have 1,000 transactions a month if you're lucky on the low end. And so you're not watching them. And so what our partners are doing is really a fairly standardized approach now. That's a dashboard for consumers. Every time any of us log into your bank, you're going to see some sort of dashboard that shows monthly recurring costs. What we're proposing is great. Take that insight that you've spent a lot of money figuring out how to show and make it actionable. Implant a cancellation, implant a negotiation opportunity. So you're not just doing sales to your customers, you're really adding value to what you're already providing and helping make those insights actionable. So it's not just, you should cancel this if you're using it, actually do it. And it's not just, you should make sure you're not paying too much for this phone bill. You actually do it. And so it really is, these are easy products to sell. We have never come across a potential partner that said, gee, that's a bad idea. Really, it's a matter of how can we bring them to consumers in the most effective way that doesn't interrupt our partners' IT schedule and become a 5-year project. And so we've worked on that significantly over the last number of years.
Yeah, it sounds like what you're describing is the bank or the financial institution stepping forward as a customer advocate. But I got to ask, are the streamers and the subscription services, What kind of relationship does this create between them and the banks? How are they reacting to these kind of products like you're describing?
Yeah, it's a great question, and it's sort of a natural tension. So, we believe that it's in the best interest of all parties to cancel subscriptions when customers don't want them. Yeah, you can make a little bit more money and a little bit more interchange if a subscription goes for another month. The challenge is multifold, though. Consumers, when they have difficulty canceling, they have several paths. None of them are good for the merchants. One is to complain, right, from a legal and regulatory perspective that these are perpetual contracts. That's messy. The merchants don't want that. And then for the banks, if a customer isn't able to easily cancel Netflix, some meaningful percentage, and I'd encourage all of the listeners to dig into this just a little bit, it's friendly fraud. Consumers will reach into the bank via chat or call, which costs, a lot of SG&A, and say, I didn't order, wink, wink, this service. And unfortunately, that triggers in the banking environment fraud investigation and then write-off, which is extraordinarily expensive. And so that's what we're looking to solve. When folks ask about a unit P&L on these products, yes, we bring customer delight. Yes, we bring customer engagement and frequency. All of that good, I say it's soft stuff in the P&L, but we also bring green dollars because you are avoiding all of that SG&A and COGS expense on investigations.
So, to maintain this awareness of subscriptions and all the details that are involved there, that's a data exercise, right? So, how and from where are you accessing the data that you need to do what ApexEdge does?
Yeah, thanks for that question. So, that's really what our partners do. Our partners, again, being banks, PFMs, enablement companies, and so on, like Envestnet, who's sponsoring this program, they have data. They have a warehouse. They are mining those transactions and assigning values and attributes to them. They are the ones that are helping our bank friends identify these as monthly recurring transactions. And so with that data, which we don't get, we are sent a service request after a call to action is placed, and we do the cancellation or we do the bill negotiation. And then we status back to the bank or we status back to the end user, totally configurable based upon the integration. But in any case, it really is that partner that has all of the data. That's what's so exciting about a lot of these fintech solutions as we move forward into really mass market is some of these great challenger ideas that were really innovative and really disruptive a couple of years ago are being absorbed into the larger banking ecosystem. And we're in that space as well. It really is a concept of bringing additional value to customers, helping them, doing all of the good stuff, and at the same time, saving and making money for the institutions.
Well, I wish I didn't like every TV show that every streaming service puts on the air, but I do. I'm quite pathetic in that way. But now, I should lean into paying attention more to what subscriptions or wait for my bank to do it. Hopefully, they'll be using ApexEdge. Michael, thanks for taking a few minutes to be with us. If somebody wants to learn more about the company, what's the best way for them to do that?
Absolutely. Take a look at www.apexedge.com. There's contact info on that site, and we'd be delighted to connect and go over the products in detail with your listeners.
And who's the ideal customer for you? Who should look at that website?
It's banks, credit unions, and PFMs. It's those we always say trusted partners. You have consumers that trust you as an advisor. Let us help you turn into an advocate with these services.
Great, we've got it. And for those listening, don't forget to subscribe to the show if you want to keep hearing all the ways that data drives finance. And if you want to see how aggregated financial data might be of great use in your business, just visit resources.yodlee, that's YODLEE.com/podcasts. And we'll see you next time on Data Driven Finance.